The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to this July 29th wonderful Wednesday edition of today's Trader's Edge show. How about that? That throat is getting a bit better out there. That means that I am Stevie Perseverance Rhodes. Of course, what we all know is that we should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary afternoon, an extraordinary evening. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, we'll go look at the circumstances that the buyers and sellers, the bulls and the bears, are throwing out to you and I. We'll look at individual stocks, indices, commodities, currencies, anything that you'd like, because this is a call-in talk show, and I'm absolutely here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Internationally, 727-445-1044. This is Wonderful Wednesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 92 points, trading out at 17,722. S&P's up about 10 points at 2103. NASDAQ Composite struggling out here, so we're going to take a look at that. That's up 8 points. That's trading out at 5,097. Russell 2000 also struggling. Now, the Russell 2000, I get. I can understand the Russell 2000 just kind of sitting out there waiting for the whatever the Fed is going, whatever Janet Yellen is going to say today. You know, with regard to interest rates, you can see the Russell 2000 is the one that would be the indice that would be potentially most affected out there with higher interest rates. So I get that. The NASDAQ Composite, not so much out there. We had the DAX finish up 37 points. That closed at 11,211. We had the FTSE close up 75 points at 66.31. How about that moving light sweet crude today? Right now trading up $1.40 at 49.37. Gold is flattish, down $2. Seems like every time I look at my screen, gold is down a couple of bucks. Silver's up 12 pennies, trading at 14.76 out there. Some big movers to the upside today. Well, and to the downside. Hey, to the downside, you got New Market Corp, NEU, down $36. Now that's 8% to the downside. Tableau Software, that's down about 18.5%. That's off $23. Medivation, that's down $14, 13%. Regeneron Pharmaceuticals off $10. CEB Inc., that's off $10 out there. Yelp is off $9. So we've got certainly got some movers to the downside. To the upside, though, apparently everybody's headed to Buffalo Wild Wings. BWLD, that's up 13%. That's moving into a swing point, maybe the all-time swing point high. It's doing it today on a daily chart with volume. It's up $22 and change. C-Tech Industries, that's number 2. C-Tech Industries, maybe it's called Sci-Tech, but I'd like to call it C-Tech Industries from that great movie Sneakers out there. Did you see that movie Sneakers? I was No More Secrets was the code there. Not code, but the scrambled word. But you had Robert Redford, you had Sidney Poitier. Too many secrets. Thank you. Too many secrets. Thank you there, Z. God, who else was in that movie? Number of great. Dan Aykroyd was in that movie. Good movie. In any event, Northrop Grumman, that's up about $12, 7%. Priceline's up about $12. Natural Health Trends, that's up 42%. I don't know if that's what's going on there, but so let's first start off by taking a look at what's going on. That's right, C-Tech Astronomy. There we go. Let's take a look at. Thank you there, Z. Good to have men and women inside, backing you up. So let's go take a look at. So what should we take a look at first here? I think what we want to do is go take a look at the summation index across the board for the. What is this on 30? I don't understand this. What the heck happened on my charts here? This is very weird. Oh, I updated some software, and that must be And even it hasn't changed the pattern. So sorry about that. I visually looked at something. I'm like, what the heck is that? Upper left-hand or the left-hand panel on my screen, New York Stock Exchange. Dead center, NASDAQ Composite. To the right side, the Dow. Now, here's what's interesting. The New York Stock Exchange is very strong. If we take a look at it today. We'll take a look at it off of the bottom from a couple days ago. Let me just blow this up just a tad more so we can get a feel for what's going on here. So we know the New York Stock Exchange was coming from a very oversold level out here. You and I talked about this a couple days ago. Nice move yesterday. That nice move yesterday, you remember, the first objective between swing points, we went through taking a look at Fibonacci retracements. And in this case here, the Fibonacci retracement you're looking at is July 16th from that high down to the low of a couple trading sessions ago, July 27th, out of 10,636. You go from the high to the low out there. All you really need are in essence, three. You got 0 and 1. That's in essence what shows up on my system. But you just really need three different retracement levels. 0.382, that so-called dead cat bounce that you're typically going to get on any kind of turnaround. You want to pay attention to what kind of bar is moving into that. In this case here, a wide-ranging bar. Closed right out at that 0.382 level yesterday. Today it's picked up where it's left off. And in doing so, it's very close to getting that oscillator reading back to the positive number. Let me just see where it's actually at out here. Let me get my data window up. Is it back to positive? Let me just see if it is. Nah, it's just slightly negative. Probably needs about 10 or so more net advancing issues in order to turn positive. Now, if that gets above the zero line today, that also is a very strong, and I mean, that's very strong indication of this bottom out here that took place a couple of days ago. And what it does is it offers you and I the promise that the New York Stock Exchange wants higher price. Now, what it's also doing here, it's getting back to the 0.618 retracement level, 10,881. So if Janet Yellen doesn't pull the punch bowl away, doesn't spoil the party, whatever it is out here, and you would expect that the market will finish up towards its highs. In the New York Stock Exchange, towards that 10,881. Probably turns that price oscillator positive. If it doesn't out here, that's going to have to make us say, something to think about. But right now, we've got to go with the information that we've got. And the information that we've got is this is a strong move. It's already in 2 days made the 0.618 retracement. Now, you do see a descending price channel on my screen out here. That descending price channel is very likely where the New York Stock Exchange runs into some significant resistance out there. If it has the ability to take that out, that would be very bullish. So the next moves out here inside the NYSE, assuming that price oscillator gets above zero, 1081, 10947. And then somewhere between 10,947 and 11,032, where we see what it can do as it gets into that descending price channel. Now, that's on the NYSE. The wider swath of the market, as you and I speak right now, is stronger than some of these other indices. And now, what's a little bit troublesome here is the NASDAQ Composite. Because the NASDAQ Composite's got 3,000 plus issues in it, just as the New York Stock Exchange does. And the NASDAQ is more likely what's going to lift any boats higher versus the NYSE. It's good to see good market breadth. You absolutely have that. Anybody who says that we don't, I'm not sure what channel it is that they're looking at. It wouldn't be TFNN, that's for sure. But the NASDAQ Composite here, take a look at what it has or hasn't done. Now, what it has not done is gotten above the 0.382 retracement. And this is off the same set of swing points. Now, I know it has been working extra hard out there. And maybe it's saying, you know what? It's hump day. It's hump day. I'm going to Buffalo Wild Wings. I'm going to go celebrate with them, and I'm taking the day off. That's the only thing that I can figure that it's probably doing out here, because it's only been able to get up. I don't even, has it made that 50, has it made the 5184 number? Let's go see if it has out here. Boy, all those data windows were shut down. 5104. That's pretty good. Whoa, man, the 0.382 retracement number, 5104.43, the actual intra-session high so far, 5104.74. Hey, if the market turns down, if they're unhappy I don't care whether it's Janet Yellen or anything else out here. And this NASDAQ composite starts turning down from here. That sets up a potential of it certainly sets up that likelihood of going down and testing that July 7th hammer candle out there. It's probably a decent A to B equals CD to the downside. Nonetheless, I can justify here that it's, moved out of that oversold condition, broke through a trend line. When I take a look at that oscillator reading, that usually says price is going back up to its highs. When I say usually, I'm not talking 50% of the time. I'm talking the majority of the time when I see this pattern out here with regard to the NASDAQ composite and the way that it deals with this price oscillator. Now, the confirmation is getting above zero, just like we took a look at inside the New York Stock Exchange. Inside the Dow, hey, that's very strong as well. Not as strong. See, take a look at these retracements that we're looking at. When you take a look at the New York Stock Exchange versus the Dow, the wider swath of the market may be telling you and I a story that everybody else is, So that's why I spent the time on it, because the New York Stock Exchange is outperforming. If we just take a look at measurements, if we just use that Fibonacci ruler out there, which is a great tool. Like the Dow is up above the 0.382 retracement level. If it closes above 17,681, that's positive. That says it's likely going up into the 17,855 area. Its price oscillator, it has enough net advancing issues right now at 1:17 p.m. to say that bulls have resumed control of the Dow after just a couple of days here. It took many days. It took how many days did it take for that price oscillator to get below zero? It took from its peak out here. Took 1, 2, 3, took 4 days. 4 days to get down below zero. It's only taken 2 days to get up above the zero level out here. So a little bit of divergence. Let's go take a look at the Russell 2000. That way you can see that as well. And we round this thing out here. Let me switch over to a different screen as we take a look at the Russell. And we'll see on the Russell here that as we take a look at retracements from the same set of swing points out here, that being the high out here on July 16th, down to this low on July 28th, it has not even made the 0.382 retracement. That number is 1232.19 out there. So you can see very weak. Now, it's very easy, in my opinion, to justify why the Russell is doing what it's doing. It is more troublesome that the NASDAQ composite has decided to take a vacation today. But we'll see how all this ends up out there. So that's what's going on. Now, with regard to, let's go take a look at this chart here. It's just really an update as to where we were at yesterday, what you and I were taking a look at. I probably should turn off a few things here, and then I can turn it back on. That way it makes it a little bit easier for each of you at home. We don't necessarily need that just yet. We're going to take a look at retracements on it. Let me turn off the market profiles as well. There we go. So as we take a look at this chart here for the ES mini, this is the 30-minute chart. What the Sam heck happened out there? Very, very strange. That's a 120-minute chart. I can tell by looking at it. That's the strangest thing. In any event, you didn't call to hear that. We can see your 0.618 retracement level, nice wide-ranging bar. So we're at a resting point here inside the ES Mini. It's not going to do anything until after Janet Yellen comes out and says whatever she's going to say. This is Steve Rhodes with TFNN. There are not too many secrets here. We share it all with you. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Quick back, folks. Dow's still up 98. S&P's up 10 points out there. So before we went to break, we were taking a look at a chart that you and I have reviewed here for the past several days, helping us to understand what exactly the market is doing out here. Take a look at those different floors and levels of support and resistance out here. Of course, yesterday, we took a look at that 2,085 level. Being the price that was the intersection, in essence, of that descending price channel. It's the yellow diagonal line that we see on my screen out here. That also happened to be the 0.382 retracement area, and that was also the bottom of the TAS market profile daily box out there. We can see that price finally got up above it, between late afternoon, just slightly above it, came back and tested it throughout the evening for the most part, and then took off at about 2 o'clock this morning. Took off and used that as a trampoline level, and that trampoline level, price was above the 0.382 retracement, just simply has gone up to that next floor on the elevator. It's gotten up in essence to the 0.618 area. Now, no reason that it can't spike or shouldn't spike the 2100 level. It hasn't actually hit that yet. It's been up to 2098.75. Which is really close out here. So it may be that this is starting to tire out a bit. I think it's more so just waiting to see what comes out of the Fed. From the bullish standpoint out here, and this is already bullish, right? It's broken through a descending price channel. S&P futures are fine. NASDAQ futures, not so much. Russell 2000, not so much. But right now we're taking a look at the S&P futures. So we've already identified, showed you the divergence or the issue with regard to the market. Broad-based rally, but basically the NASDAQ composite hasn't joined along, or the Qs, the NDX. We'll take a look at that too out here. In fact, we will go look and see what's going on inside the ETF structures for the indices out here. But 2101.80, which is just slightly above that 0.618 retracement level, that's your TAS market profile point of control. That's a area where price is very comfortable. If we take a look at it's where the biggest party is thrown out there. If we go back and take a look at my chart and we add our primary trading range boundary lines out here, we're also going to see that at the 2104 level, so right above that TAS point of control area, is another significant area of resistance. 2104.50 is what we'll call it. And at 2104.50, that's where we've seen the second largest number of opens and closes where price has stopped, because the essence of price is truly the body of the candle, not the wick. The wicks are nothing more than the extreme of that candle session. It's like it's the crying, it's the yelling out there. It's really the body of the candle that truly is the essence of price out here. And so therefore, getting above 2104.50, that's a key number, folks. That will be what that message will give to me, at least, is that price is going to make it not just to 2111.32, but maybe it's going to make it all the way back to the 2129 area, or get really close, or at least test that swing point out there. And it's very easy to make that case. It's July 29th. You've got the 30th, right? You've got the 31st. The end of the year, end of the month, the window dressing out here. So, but nonetheless, these are the hurdles. These are the next hurdles for the ES Mini to be able to overcome out there. If we take a look at what's going on inside the VIX index here, below the 50-day exponential moving average, we've covered that ad nauseum out here, so we won't cover it too much. 50-day, though, 1421 is going to be a key level to be paying attention to. Any close back above that, that's where the real price damage can occur inside of the markets out here. Now, the interesting thing, when we take a look at the Qs, we'll go take a look at the ETF structure. Man, here we are against this 30 everywhere. How strange is that? How strange is that? And now you can see I've got some work to do here. So much for upgrading software during the day out here. Here's the QQQEW. That's the equal-weighted ETF for the Qs. That way, and it's a great tool to use in conjunction with the actual weighted ETF structure out here. We're always looking for divergences, you and I. In fact, I hadn't looked at it for a while. The day my clients and I closed out our long trade and went short at the top of the market out here was because the day before I had seen this divergence as I went through with you. Somebody had asked me about it, and when I looked at this, I was like, holy, exactly. That's exactly what I said to myself. Now, you can't use it as a timing tool, so you're using other techniques in order to be able to time the market out here. But knowing that we had a divergence, meaning the equal weighted was making a lower high, whereas the weighted was certainly making a higher high. Of course, that was primarily a result of, not only, but primarily a result of Google out there. But we can see here, we don't have a divergence right now. Even on the pullback, on the equal weighted during this move down, the equal weighted was actually pretty strong inside the Qs. That's why I'm surprised that the NASDAQ and the Qs aren't doing a whole lot just yet. Something to think about. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back, folks, before we went to the break, we were taking a look at the equal-weighted ETF for the Qs out there. Now we're going to switch over here, and we're taking a look at the equal-weighted ETF for the S&P 500 out here. Whereas on this move back here, we don't have any kind of divergence. We have everything really in tandem. The lows were not taken out inside the Qs. The lows were not taken out inside the equal weight. We have a little bit of a divergence here inside the S&P 500. So this is what's unusual. We're taking a look at the ES Mini, right? We're seeing that it's had a nice bottom that was put in, a nice strong bounce, just like the New York Stock Exchange. Yet, we take a look at the lows out here, the equal-weighted ETF between the lows here from the July 7th time frame to the one of a couple of days ago. Equal-weighted was making a lower low, whereas the weighted was not out there. It is typically the equal weight that points when there's a divergence. It's the equal weight, just as it did up here at the top. It's the equal weighted that really points the way. You know, what would change my tune on that, my tune of caution, would be for the equal weight to be able to break through the descending price channel that we're at. In fact, what it really would take is not just to break above the price channel, but getting back above the highs from July 17th. At the same time, with the SPY doing the same thing out there. But it's another diverging pattern that is important for both you and I to continue to pay attention to. So the Dow's up 100 right now. Let's go out to California to Brent. Brent, thanks for calling. Thanks for holding. How are you today?
Thanks for taking the call, Steve. It's good to talk with you again.
Thank you. You want to take a look at ticker symbol I'm not familiar with, SCLA?
It's actually SLC, Silica Holdings, SLCA.
FLCA. Okay, it's the sand people out there. No,
Yeah.
say that. What's the symbol again?
Should be SLCA, Silica Holdings.
Got it. Okay, Silica Holdings. Okay, so Silica Holdings have not looked at this in what seems like forever out here, and looks like this thing has had quite a move today. Did they release earnings or something else take place
Yeah,
today?
I believe it's earnings. I'm long in the stock, so I noticed there's quite a few of these stocks that in the different areas of commodities that yesterday and then today had pretty key reversal candles, and this obviously is one of them.
Yeah, that's an understatement. Yeah, that's an understatement. What was it that did you get in after you saw the the explosive move, or had you gotten in it before that?
I'm in at 21.
You're in at 21. Okay. All right. Great. Okay. Good trade here. How can I assist you? What additional eyes can I put on this for you?
I just wanted your opinion. It seems like, I mean, I know a lot of it's short covering. I went and looked at the amount of shorts in this, the percentage of float. It's high. It's almost 40%. So I'm sure a lot of it's bad. And I guess just to see if there's any continuation of this move after today. And then obviously it hasn't even closed yet today. So I'll see how it closes and then take it from there, I guess.
Yeah. Now these guys here, they had benefited from all the. I think. Correct me here. Did they benefit from? Or let me ask you the question. Did they benefit from all of the fracking that was going on? Was that really one of the big elements of its move up into the highs out here into the $75 area? Is
that is a big part of their business. They do. There's a lot of other applications for that particular product for. I mean, all kinds of different manufacturing applications, and I do think that was the reason it ran up and also the reason it got punished on the way down. Once oil came down, then it came down in reaction to that.
Yeah. Well, the first place that I would look for this, so what this has done, let me see out here. From a daily perspective, where it's trading at right now, 24.40, happens to be the top of the TAS market profile box. That number is actually 24.35. So you'd certainly love to see it close above that. It doesn't mean that if it doesn't, that you should exit the trade or anything, but you'd certainly like to see it close above that today. Absolutely a wide-ranging bar. Volume in it. It made a lower low, but it looks more like it's volume, off of the bottom out here. I would just say that the next area of resistance is just simply that descending price channel off of the highs out here from May 5th, as well as the highs from June 11th out there. That would be one place to look to see if it can take on that channel line and what it does. Of course, if it gets up there and stalls and pulls back on light volume, if you're still in a trade, you'd look to, add to it on any kind of a pullback out here. Let me see if there's any other tool, or is there anything else that you're looking at that initially I have overlooked for you?
No, I think that's it. I want to see how it reacts. The close today is important to me, and then I want to see some follow through. Going forward.
If I take a look at one of the momentum indicators out here, and I take a look at the directional movement indicator, right now today they're kissing cousins. So what you'd like to see is you'd like to see a crossover of that indicator, whether it's today or tomorrow, because then that offers you promise that from a momentum standpoint, it's actually giving you a long signal out there. So you don't have that just yet. So I'd have to say that there's really three levels of resistance to watch on this. To sum it up, you've got your you got your daily profile high, but I can add to this chart. I should be able to do it right here on the fly. I should be able to add the weekly profiles as well. Okay, so this is interesting. So the actual intersession high, Brent, basically ran into resistance at the weekly market profile. So an even better number for you to see it close above at some point in time here in the next couple of days is you want to see this get above 25.17. That, in essence, which is not too far away from that channel line, assures you that you're going to go test that, which is probably around 26 and change out there. You're at 24.48. But then getting above that, it says that you've seen that change in trend, which says to me that this could run all the way up to 38 bucks. 38 bucks, and where I'm going with $38 out here as the initial place is that big, huge downdraft from the day of November 28th. So there's a lot of folks that bought this equity between 38.10 and 30.17. And many of those folks right now, they're pulling for you. They want you to be long. They want price to get back up there because they would like to just simply get their money back. And that's probably where you really start to run into some fairly significant turbulence as you take a look at this. But you're certainly in at the bottom on this. You'd like to see it just give you some of those some additional change in trend signals out there. So nice trade. Yeah,
that is a stock. Once it does change trend, it starts going that direction, it can make a good move. I've seen it do it. I've traded this stock quite a few times.
Okay, good. Okay, yeah, so you've got the experience. So, that's my initial eye at it, and put in a couple of additional indicators to help to give us a guide, as to what it wants to do. That directional movement indicator, just as an example, we saw a negative crossover back on May 15th. When this thing was trading out at about 35 bucks and change out there. And really ever since then, it's never had that bullish cross. Today, it's very close. It's not there just yet, but some additional movement to the upside, you could see that cross, and that would be a bullish sign out there for this equity.
Very good. Yeah, I think the last time we talked was Diana Shipping, that big head and shoulders pattern. That was a good trade as well. I got that at 610, and I took some off the other day at 810, so that was a good one.
What's that ticker symbol? Is what, DSC?
DSX.
DSX. I had 2/3 of it. Yeah. So Diana Shipping. So that's nice that you've got a couple of these shippers out here. And
yeah, we talked months ago about that. That was probably back in March or something. We talked.
Yeah.
About that. And yeah, that worked out okay. And another one I own that's doing well is Frontline Shipping, FRO. That's done pretty well. So they're out there, which is a little counter to what the commodities have been doing. They've been decimated, and it would seem that it's kind of divergent from what they're doing. That you'd think with commodities coming down, that's what they're shipping, that they would be doing the same. But there's some signs of a little bit of life there. We'll see if it continues.
Well, frontline, the chart looks really nice out here. And as what Brent's looking at, folks, what my eyes immediately went to was the trading day of January 12th, which had a lot of things changed on my system. Looks like 20 million shares out here. Hey, Brent, you should give me advice. Don't ever do a system upgrade before your radio show. Things have changed on my system. I'm like, what the heck? It happened out here. But folks, there's a high volume high. We can go back further. It's not an all-time high or anything, but that's really the target out here for Frontline FRO, which is right around the $5.05 to $4 out here. And it's up above daily profiles, weekly profiles. It's got a nice momentum crossover from from back on the, looks like around July 21st out here. Are you still in this equity?
I bought that. It was down. I'd have to go back and look. I want to say it was around $2 when I bought it.
Yeah, nice. It's trading at 326. I like this chart better than Diana Shipping. So I like the idea that you took some off the table there. I like. I put that money back into Frontline. This looks pretty good. Looks like it should make a run up to that $4 to $5.05 area.
I hope you're right, Steve.
Me too for you. Hey, thanks so much for calling, and have a great afternoon.
It's always a pleasure. You take care, Steve, and I'll talk to you soon.
That's great. Thanks. That was Brent in California. We love our California. Of course, we love folks from all around the world out there. That was Frontline Limited. Folks, you'd like to buy this one on a pullback. It had just a nice little sign of strength here, July 21st. If this thing could pull back, test that gap, 291, maybe to anywhere from 275. In that range out there, it looks pretty good. Maybe 293, the low of its daily box out there, might be the spot to either add to it or maybe get in on that. You'd have to pay attention to the volume if it were in fact to pull back out there. Let's take a look at the ETF for the ETFs for the indices out here. Well, let's take a look at light sweet crude. Let's take a look at the August contract here for light sweet crude. We've seen a fairly big intra-session move. I see it's given back some of its gains, trading out at 49.13 out here. Now, what you had here inside of light sweet crude yesterday, you had a nice little key reversal session. Light sweet crude is in the extreme oversold level. That does not mean that it cannot be sold even further to the downside, but it was where the rubber band totally had expanded. And what is interesting here as you take a look at the light sweet crude, the last bottom that formed in light sweet crude. Now, right now I'm looking at the August contract. The continuous is going to look totally different than this, but it formed a bottom back in March 18th. And when it did that, it also was in an oversold condition, and it also formed a key reversal session out there. And then, of course, you saw a nice move inside light sweet crude. We'll do the same this time around. I don't know. If you were long light sweet crude, you would want to close out that trade if you saw it close below the 46.68 level. Because if you do that, it's going to go all the way back to a lower price. I think it's around $42 or so on the continuous contract out there. The continuous contract. So that's what's going on inside of light sweet crude. If we go take a look at, now let's go over to take a look at the ETF structures out here. Let's look at the QQQ series. Now, what's interesting, even though the NASDAQ is weak, and you can see that here. On my chart for the Qs, you can see it's only made a 0.382 retracement. 111.54 was the number out there. This thing has gotten to a high today of 111.53. It's missed it by a penny. Not a big deal. It's also, but it is close. It is back above the, what was that April 27th swing point. Now, that swing had 31 million shares out there. You've only done, looks like, 11 million shares? Yeah, I think 11 million shares. Boy, I got to make I wish I had enough time to change the properties on this thing so I could actually read the volume and some other stuff out there. But not even, it is back up above that that old consolidation level out here. But it's got to close with some strength out here. It needs to clear that 111.54. It needs to clear 112.06 out there. If it does that, price probably travels above the 0.618, probably gets back to 113.40. I would have thought this morning, after we saw the message of the markets yesterday, we saw some additional breakout, I would have thought that today, you would have seen, if any indice was going to go ahead and make it back up to its highs, that the Qs would be it. I'm not saying that it won't, but it just simply has not, and so maybe it's just sitting idly by as well, waiting for a decision from Janet Yellen. IWM, as we covered this earlier, has not done anything. Hey, the IWM, it's made that eight. Well, what it has done, I take that back. What the IWM has done is made a perfect 1-to-1 A to B equals CD to the downside. Did that, formed a nice little key reversal session out here. Did that on July 28th. That was yesterday. And today you're having just a bit of follow-through. Light volume, but a bit of follow-through out here. Likely target, if there's no reversal here, 123.06, 125.37 inside of the IWM. Inside the SPY's up by 86 cents with 45 million shares so far. We covered this. We've been taking a look at the indices and so forth. It's made the 0.618 retracement. I don't know if maybe we didn't look at the S&P 500, but it has made it up to that 210.54 level. If it continues to finish strong, it'll head up to 211.70. This is Steve Rhodes with TFNN. I'm going to go see if I can get my commas back and my volume on these charts out here. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We didn't take a look at really any individual stocks other than a couple with Brent in California. Let's take a look at a few of them that are moving today. Buffalo Wild Wings, I mentioned that is trading into its swing point. Is that its all-time swing point? It looks like that probably is. Let me put this on a weekly chart here real quickly and see if it is. Yeah, it is. So even on a weekly basis, let's leave it on the weekly. This had a price projection, an A to B equals CD, the upside of 205.78. You're trading at 194 right now. It's trying to take out the daily/weekly swing point at 195.83. On a weekly basis, 3.5 million shares. You're already at 3.5 million shares. It's going to test 195.83. If it can close above that, well, that sets up another A to B equals CD to the upside. That one would come off of the swing point here. We could go ahead and put that one in as well. Buffalo Wild Wings, that would come off of the October 2014 lows, and it would give you a price projection 1-to-1 of about 222.68 to 242.72. So Buffalo Wild Wings looks pretty good on the weekly time frame out there. How about Panera Bread? Panera Bread, and these are all folks that are out with numbers out here right now. You're just interested in what is it doing versus how well they or how poorly they perform. In this case here, certainly how well. In the case of Panera Bread, it's taken out a line of resistance. That's a swing point from May. In 2013, May 27th, there was 1 million shares out there. You're already at 4.2 million. That's also taken out the swing from March in 2014. That had 2.7. So Panera Bread out here, if you want to get conservative on this is a weekly chart that we're looking at. As far as A to B equals CD patterns, there's really two out here that you would look at. Here's the first one that says you're going to get up to 212 and a quarter. The second one out here, that's the one that's underway right now. Well, they're both underway. You've hit the one-to-one. It says 216.96. So it looks like next stop for Panera Bread, PNRA, is up in that 213 to 216 level out there. Let's look to the downside, though. Crying their hearts out. New Market Corp out here. Looks like the market is not digging what they reported out here. This is a weekly chart, again, that's up on our screen out here. That's okay so far. Volume, only 290,000 shares. Not the most liquid of equities. Nonetheless, this thing here can easily pull back. Well, just let's look at retracements out here from a weekly perspective. Might be worthwhile to take a look at the daily chart. But looks like this is at a 396.33, maybe 372.43 out there. Oh, my goodness. Look at all those decimal points I've got after those fib numbers out there. Looks like I maybe hit a button I should not have hit during the breakout there. Also to the downside, ticker symbol DATA, Tableau Software. That's down 17% off $22 out here. And where is this thing headed to? Let me put this on a daily chart. I'm sure that it gapped down. Yeah, it did, and it's gapping right down into this little sign of strength. So that's what it's tested, and buyers are trying to hold it up. That's the sign of strength took place between May 7th and the 8th in this equity here. It had broken out with 5.3 million shares, but pulled back in that area with 8.1 million shares. Nonetheless, it's acted as support, and it closed below 98.26. And what likely happens is a move back to the breakout area from February the 4th out here. And David says it's Tableau Software out there, maybe because it's trading lower. So I'm sure he'll have some input on this little equity out here that it is blowing apart as we speak, but it has found some support. Well, that's how we're going to just have to end the show here, folks. But I've given you the parameters to watch and pay attention to. Watch David's show for sure. The NYSE, it is up above that zero line as we speak right now. It's price oscillator. So you got the Dow up above it. You got the NYSE above it. But let's see what happens in the next half an hour or so. Have a great Wednesday. I'll see you tomorrow afternoon. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.